Hello, everybody. This is Danielle. How are you doing today? Happy Friday. Danielle, our superstar from the Pain Show. I always love going on the show. It's like a nice pop quiz. I was definitely going to go over my notes from that. I sent out my picks from the show to you members yesterday. So I hope that was helpful. Reddit got killed. I'm glad that I took it off yesterday, right before the close. It was the weirdest thing. Well, we can look at Reddit in a minute for sure. But it was the weirdest thing because it was looking so good yesterday, and then I don't know. We'll go over that chart in a minute. But I did take mine off yesterday, right before the bell. Grabbed a couple of your buys and doing well today. Nice. Trying to add Reddit. Have to trade it by appointment, I guess. They don't want to fill me. NASDAQ coming up to resistance. Yes, I mean, I think overall the market looks really good. We've been consolidating, we've been in a tighter channel. We're still up above the 50 simple on the daily chart, which is great. We're also in a daily squeeze, which is great. If you look at the volume flow, we're starting to get a little bit of bullish volume here. We have a wick at the bottom of the candle. I mean, all the signs look pretty good here, especially because on the lower time frame charts, we have incoming volume. So you can see that there's a squeeze on this time frame, there's a squeeze on this time frame. You can see you're shifting around, you're flipping to the upside. Um, you know, you have higher than average volume on this bar and the rest of these bars as well. So all of that's looking pretty good. Um, as far as, where the Nasdaq can go from here. If you look at the S&P, looks like the S&P futures like just made a new all-time high, so that's great. The daily squeeze in the S&P futures has not fired yet. If you go down to the lower time frame charts, again, you can see that there's some nice incoming volume, nice little trend on these lower time frame charts. We're shifting around this direction. You have a shift on the squeeze as well and a shift on volume here. So all of that is looking pretty good. Let's go ahead and look at the SPX. Let's see. So it looks like we made it up to 69.77. New high there as well, which is great. Let's go ahead and redo these levels. Okay, so looks like we came just up to the 1272 extension level at 69.78. So perfect hit on that. The next overhead target is going to be 7,000 and then 7,020. So all around, we're just still creeping up towards that $7,000 price point, which I've been looking for, I don't know, at least a month now. So we're getting pretty close. We're almost there. As far as an intraday look on this goes, um, definitely a lot of nice buying here. If we look at the market internals and just start off with the ticks have actually been in a neutral range, like pretty much the entire day. So there hasn't been any extreme buying or selling really at all. There was some extreme buying first thing at market open, and then there were a couple other times like right here, and then almost not that long ago, like 20 minutes ago. And then there were just a few tiny little taps lower down into those zones. But I would say overall, um, we're just kind of in a situation where there hasn't been extreme buying, but there has been consistent buying and there's been greater than average buying and more buying than selling, if that all makes sense. So looking at all this, bullish, can't complain. VIX is heading lower, put call ratio is going higher, which I do find to be interesting because when the put call ratio is going higher and the market's going higher, that typically gives you a situation where the indexes can keep going higher. So that's interesting. Um, but all around, I'm not ready for an end of day trade yet. Still too early. But, unless there's some weird reversal, I don't see I really don't see that there is any reason to short this thing. Let's look at the options chain. All right, so you definitely have the high open interest here at the 7,000 strike, but you'll see that the expected move into the end of the day is only $7.49. So with an expected move that's so low, there's just no way that you're gonna come all the way up in here unless there's some major news announcement. Um, if there is some kind of major news announcement, then that could send the SPX all the way up to 7,000, but I would say it's pretty unlikely. I would say more of a more likely scenario is the fact that we have a lot of action at the 69.75 and the 69.80 strikes. So, um, these two strikes right here, definitely it would make sense for the indexes to chop around those levels. If you wanted to do something like a neutral iron condor, see here. We're still getting $5 credit for a $10 wide condor, which is actually really good um, at this hour of the day because there are only 52 minutes remaining and you'd really only want to be in it for maybe 40 minutes, maybe 45 minutes. So that's actually pretty good as far as like a neutral pinning trade is concerned. Um, does it look like a neutral kind of day is another question just because, we have had a nice bullish trending day where we've been moving higher the whole day. So is it realistic to say, hey guys, let's just wait and see if the indexes will hold around 69.75? I think it's somewhat reasonable just because it's an expiration Friday, and because we also have all of that high open interest here. So I think if you want to do an early um, options expiration Friday trade, looking at selling that neutral iron fly, I think makes sense. If you instead would rather wait and see if we get a directional move, that trade is not going to be setting up for another 20 minutes. So when you're looking at, what a directional move could be, honestly, you're already at those penning strikes. So 69.80 would be one just above, but that's only 5 points away. So that's not really that, it's just not really that big of a move. Um, if you look at the downside just to see if there's anything that's standing out, not really. You do have that 69.70. So I don't know. I think it would make sense to look at doing something neutral here. Um, we can just try it for, the next 30 minutes. Like I said, 30, 40 minutes. Let's see, 69.75, 69.85, 69.70, 69.65. Nope, wrong strikes. All right, the credit already went down by 15 cents in the amount of time that I was talking about it. So that's kind of the point with these. 69.75, 69.85, 69.75, 69. Okay, so let me just try that. And then I'm gonna go ahead and look at what the price target would be. Um, so, if you sell it for 485, a good a good zone to take it off would probably be, you go for like 225, maybe 240, something like that would make sense. But I think I'll just go ahead and leave it on for now. Sometimes when I'm trying to put those orders in, it just messes up my trade. So I'm just gonna leave it right there and I'm just gonna let that move. Um, I will say that, you know, because we're up at extension targets and because we've had a nice move today, I do think that it's possible that we end up getting some selling in the last 20 minutes just because people will typically um, try to take profits on a Friday, which is basically just what I've been trying to do this week. Really just been trying to take profits on these nice moves higher. Filled on the iron fly for 490. Danielle buying puts next week on Reddit. Today's action suspicious of something bad that may coincide with a timing window. Yeah, let's look at Reddit. Okay, so I don't know what happened with this one today. I just know that yesterday when I was in it and I was making good money on it, I went ahead and took profits for a couple different reasons. So, for one, I mean, I'm always going to use these Fibonacci targets. And if you look at this last swing, you can see that you pulled back into the 34 EMA, you shifted higher, you made the first target at the 1272 extension. That was at 253. Then you traded up into 262. If I would have been a little bit quicker yesterday, I could have taken it off closer to 260. But those wicks were it just came through kind of fast. And then yesterday it already started pulling back. So that was one reason why I wanted to take profits on it yesterday. Um, Another reason was because the volume just was really extended. So if you look at the volume here, and the VZO in particular, what you will see is that it came up to this extreme level. Whenever you hit into this red zone, that's pretty much when the thing starts to reverse. So if you go back in time, you say, okay, when was it in the red zone last? That was right about here. It was also in the red zone right about here. It was in the red zone right about here. Um, let's see, it was in the red zone here. No, this day. Um, so it's not always a perfect high, but it's pretty dang close to it. So this one was a false signal because then it kept going, but that was also a short squeeze. So um whenever you're looking at these kind of trades, you just want to think about, okay, what's your time frame? What's your target? If you're still holding it, I think it's fine. But I'm just trying to start off the year strong here. And I already captured, a piece of this move. It hit my target, so I took it off yesterday. That being said, it still has a daily squeeze. If you have more time on the trade, I don't think there's any problem with holding it. A lot of the times, what will happen is these lower time frame charts will kind of like pull back, but then that gives you another entry on the higher time frame. And so in this situation, um, yesterday was just I just didn't really like the way that it was trading. I mean, it had been going up and going up and going up and going up, and then yesterday it was just kind of one of those situations where it was like it fell, and then it went higher, and then at the end of the day it really sold off, and so I took it off around like 255. Um, if you look at what it did today, it was up to 263. all the way down into here, 235. Now you're back to 247. So just quite a lot of volatility. I think the longer term trend is still intact for sure. Um, but you just have to look at how much time do you have on your trade. If you have calls in February, I wouldn't be that concerned. If you have a spread that's expiring today, that's a different situation. If you look at the weekly squeeze on Reddit still looks great. Um, you can see with this one that we have an upside price target at 312 and then at 350. So, I think there's plenty of room to run in Reddit on the longer term time frame, especially for just a buy and hold. Because it looks to me like this weekly squeeze is going to break out and explode to the upside. And that's, another like $100 of upside for the long term shares. So all depends on your time frame and what exactly you're doing with it. Let me look at a couple other questions here. Snow. All right. So let's see. This one's pulling back a little bit today, but I mean, overall, the weekly squeeze still looks really good. You have that pullback directly into the 34 EMA with the squeeze with incoming volume going positive. So that's all good. Let me see. What else do we have here? Daily chart. So daily chart does not look as favorable just because we've hit this area of resistance. We're kind of selling off from it. But I would say in order to sell put credit spreads and be happy about that, I would probably do it around like either 212 or 215 just because that's going to be not only where there has been a lot of trade, just looking back and seeing where the support is, but it's also going to be a key psychological value. So that's the level that I would look at for put credit spreads personally. Let's see. All right, just looking at the questions here. Added Walmart this morning. POTUS is meeting now with Big Oil. Ooh, Walmart looks really good here. All right, I could buy some of that. Want to buy some Walmart, guys? Let's see. So I am live streaming my session today. I was doing live streams on Tuesday. Now I'm doing it on Fridays. Options expiration Friday. So this is my live session in the Simpler Trading Mastering the Trade room. And, normally you can find me or one of my colleagues live in the trading room throughout the day. But every now and then we will do some sessions where we live stream as well on social media. So basically what I do during my session is I look for what I like to call 5-star trades. So I just use a confluence of analysis where I'm looking for technical and fundamental factors that basically coincide to give me short-term options trades. I also look at long-term stock picks as well. Walmart is near highs. So, one thing you'll find about us here at Simpler Trading is we love trading stocks that are right near highs because those stocks have relative strength and a lot of volume and momentum. So, there's a really big difference between a long-term stock pick. So, yesterday I was on Charles Payne and I was talking about my long-term stock picks. And those are tickers where I'm looking for tickers that are pulled back from the high. Typically 10-15% pullback, it would be great. Um, but basically, you're looking for something that has like a pretty decent pullback on a weekly chart that's consolidating on a weekly chart and ready to take off. However, when we're trading options on a short-term basis, we typically want to find something that is going to have more relative strength and volume and momentum. Um, and typically those are going to be the names that are trading within 10% of an all-time high, sometimes within 5% of an all-time high. Because what we're doing is we're looking for tickers that are following the trend, that we can just kind of continue, trading to the upside. So Palantir would be an example of one that it really looks great on the weekly chart. Nice solid trend. You can see these green candles. The moving averages are neatly stacked. We have price up above the moving averages. We have what's called the squeeze. This is consolidation ready to break out. So we're looking for tickers that are consolidating that are ready to move because we are looking for directional setups. So if you look at Palantir, for example, it was in a nice trend. It was in a nice trend. It was in a nice trend. Well, that happened after there was the squeeze. So you can see that there's this tool right here called the Squeeze Pro. You see there's a series of green dots, green, green, green. That means it's not in a squeeze. Once it turns to white, that means it is in a squeeze. So right here, this is when the price was consolidating. That was the perfect time to buy it. And at that time, I mean, I don't know what the exact calculation is, but you can see that the high was 143. It pulled back down into, um, actually, it's a lot lower than I thought, down into 66. So that would have been a much deeper buy than 10-15% that I was talking about. But you typically want to find a nice pullback buy plus consolidation, and then that's where the thing rips, and that's how you can get these big directional moves. So I think Palantir is setting up for basically the same kind of thing right now. Is the pullback as deep as it was that last time there was a weekly squeeze? No, because the previous high is at 207 and you're trading at 177. But there's still a pullback buy, and then the most important thing is the upside price target. So on a weekly time frame, it's going to take you longer to get to the price target. So with this one, let's say you bought it around 177 and your price target's like 225. I mean, you still have some pretty decent upside there. And if it went to your second target up at 250, that's where you'd get, even more movement up into that zone. So that was one of my picks that I did yesterday on Charles Payne. As far as the shorter term trading aspect, like, hey, is there a trade in this right now that we can use to trade this in a 1 month or less time frame, which is typically what we do for options trading in the trading room? We do have another setup here, which is the daily squeeze. So on the daily time frame, usually one of these daily squeezes, it'll last like 8 to 10 days. And then if you throw Fibonacci level on here to see what the target for that would be, it would be, I would say, about 195. So let's say you could trade it from 177 up into 195. That's still a pretty decent move. And then after that, if it broke through that high, you'd be looking at about 207. So that looks pretty good, actually. The earnings report is on the 2nd. Palantir is one of the tickers that I will generally buy before earnings. Especially right now, we're looking for a lot of tickers that have had bullish moves over earnings the past couple quarters, and then what that does is it just causes bullish momentum. So if you can identify stocks where you say, hey, you know what? It's in a bullish trend. The fundamentals are pretty good. They're making money. They're regularly making money, or at least they're making more money than is expected. That will also work. But basically, you're looking for something that in general rallies before earnings. This stock with the earnings report on February 2nd, you still have plenty of time because it's January 9th right now. Um, right up here, it says that the pre-earnings 21-day average in Palantir over the last 2 years is showing that this stock has been up around 15% in this 21-day time frame before earnings. Like, that's insane. On average, it's up 15% in 21 bars. Like, that's a lot. So, for all of those reasons, I think this one looks like a great one. The only thing I don't really like about it, nothing's ever going to be like 100% perfect. But the only thing I don't really like about it is that last quarter it did gap down 7.3%. So typically the moves going into earnings are going to be the best when they gap up um, the prior quarter. So in this case, that's not really the case for Palantir, but I still think it has like a long enough history of rallying going into earnings. All of these green bars right here, those are demonstrating the time frames that stock rallied. So surrounding earnings, it's rallied like the last 4 quarters consistently, both before and after earnings. The other thing that I don't love 100% is just that we are down below the 50 simple. I typically don't like to make short-term bullish trades on something um, that is below the 50 simple because that's just a critical area of resistance and it's just hard for tickers to get through that level. I usually like to buy the breakout of that zone. So it's one of those things where it's like, you know, like I said, nothing's ever 100% perfect. There's a lot of different signals here that are good. I still think it's a good long-term stock pick. I still think it could probably work for a short-term options trade. Um, but keep in mind that, if it can't get through 180, then maybe that's the point where if it hits that level and rolls over, you say, okay, I'm taking a stop. Um, so if I was going to trade this, basically I would buy the long calls in the earnings series, because the entire point of this kind of trade would be to ride the rise going into earnings. And so, in order to do that, you'd want to buy the calls like in the earnings series so that you could actually take advantage of that move. So that earnings series is going to be right here. So at this point, how much are you willing to spend on the calls is the next question. So, typically I like to do in the money calls delta 70. Um, Delta 70 is going to be what I'm generally looking for. So it's going to be like $1,800, $1,900 per piece per call. Sometimes I will do the out of the money calls, especially, because it's cheaper. I don't love that in this situation just because it's underneath resistance. If it was breaking out on high volume, then I would not mind that. This is just one of those situations where it's like, if you wait until it starts moving so that you're sure you're right, your entry is going to be a lot worse. So if you wait until it's up at 185, you're going to be more sure it's working, but your entry is going to be worse. So pick your poison, my friends. But I think it all looks pretty good. The other thing that you could do is you could put credit spreads like before earnings. I don't love doing that when the earnings report isn't confirmed just because you don't want to accidentally sell it in the same series in which earnings is occurring, because then it definitely won't work. But you could do like the January 23 series. You could sell like the 175 by the 170s. So if we did something like this, it's not really very favorable. So I typically like to get about 1-to-1 risk reward ratio when I'm selling any credit. So if it's $5 wide and you're getting $1.73, that's just not very favorable. So I would say you'd have to go in the money $10 wide and getting a credit of 413. Almost 1-to-1 risk reward ratio, but not quite, but pretty close. So, for example, if you had 2 contracts, it'd be $1,174 max loss, and the max profit's $826. How about a fly the week before earnings? Yeah, let's look at that. So for the flies, you just need to have a price target. Mm, so let's see. I would say, I mean, really 200 is a great price target for a butterfly because it's a nice key psychological value, but the question becomes, can it get there in time? So that would be in this series. You have a $15 expected move during that time frame. 200 is kind of a stretch, just because you're trading at 177, but I think it could happen. I think that's probably gonna be your cheapest bet as far as, you know, how can you get a trade on in Palantir for a potential run into earnings. So let's see what this is gonna look like. Oh, come on, you won't give me the 225 strike. Let's see here. Is I doing something wrong? All right, so setting it up the first leg in the money. All right, so if you do a butterfly instead of a long call, the long call is going to run you about $1,900 a piece. The butterfly is only $669, so that's substantially more favorable, I would say. As far as the risk to reward is concerned, for 2 contracts, your max loss is $1,300. The max profit is 3,662. I never ever plan for the max profit, but I look at it because you need to know what your risk to reward is. So, you know, you're gonna need to have like a 1 to 3 risk to reward ratio for to give yourself that favorable risk to reward ratio. So I'm just going to start off with one contract because like I said, I really like the setup, but I don't love that it's right underneath resistance. So I'm just going to scale in, and then if it does break out, I can add some more. And yeah, that would be at a higher price point, but I would at least have a little bit more certainty as far as which direction it's going. So the max loss for one contract is $671 and the max profit is $18.29. All right, so I'm gonna post that to open. This is a bullish entry in Palantir. This ticker has a daily squeeze. Earnings hot zone average of, what was it, 14.45% in the 21 days before earnings. We are in the hot zone right now. My target is $200, 50% stop. All right, so I'm going to post that alert in the trading room, and then I'm going to, you see all that high open interest. I always like to take some screenshots too. And then, yeah, I did put the neutral iron fly on. I'll go back and look at that in a few minutes. So I always want to document the patterns here, because that is what it's all about, my friends. So basically what we want to see with PLTR is it needs to hold this 100 simple. As far as which moving averages I use simple moving averages and I use exponential. So I use the 8, the 21, and the 34 exponential. Those are the ones that are a little bit lighter on my chart. You can't see them as well. The 8 is this one right here. Then we have the 21 here. The red is the 34. Those are exponential, and then these are simple. So we have the 50 simple, the 100 simple, and then the 200 simple. The simple moving averages that are a longer time frame, they're just better for longer term moves, and then these are better for shorter term entries. So, then I basically just come in and I just draw some Fibonacci targets. So when you're looking at the overall pattern, what you want to do is you want to look for where the squeeze is. So the squeeze is right here. You have a series of green dots, then you have a series of white dots. So that's when you're in the squeeze and you're consolidating. And yeah, it is whipsaw. It is whipsaw, and that's when the whipsaw is occurring when it's consolidating. So it's not very easy to get in when something is consolidating. It's going up and it's going down. And it's just not really doing anything, but it's staying in a range. But the entire point of doing that is to get in before it breaks out. So if you look at this one right here, do you see how there was a series of green dots and then there's the white, the red, and the yellow? That's when it was in the squeeze. So it was like it was up and then it was down and then it was up and it was down. And it was like, if you're in it, it's driving you crazy, right? But then all of a sudden you see how it just explodes. Like that's not a coincidence. It did that because earnings was coming up and it did it because it was breaking out of consolidation. And then this one right here, you can just go back and look at all the different squeezes. Palantir was one of my top tickers last year. I always, at the end of the year, I look at the tickers I made the most money on, lost the most money on. Palantir was one of the top ones. That's always the case for these trending stocks because they're just, I don't want to jinx my trade, but it typically for me is the case that the trending stocks that do well before and after earnings are generally going to be the ones that work out better just because they're in a easier to predict pattern. So for this one right here, like it had the consolidation right here and then it broke out. You had a consolidation right here before earnings that broke out. Consolidation right here that broke out. So consolidation right here that broke out. And then, you compare that to something like Tesla that was just kind of all over the place last year. It's just a different pattern. But, different people have different tickers that they vibe better with. Tesla and I did not get along last year. I, you know, should have just given up on it like halfway through the year, to be honest, because we were not getting along very well. So Tesla and I are taking a break. Me and Elon, we're on a break. But it really just has to do with the overall patterns. What is this? Get out of here. I'm not trying to make a recording. Cancel recording. I was just trying to take a screenshot for you guys. So then as far as the Fibonacci level goes, you just draw it from the high to the low, and that's going to give you the price targets. So let me give you the price targets for this, and then I'm going to look at my SPX trade. So I erased the levels the market already went through. So that would be that one right there. So then the next target would be really 191, 200, and then 207. So let me go ahead and post this one. PLTR setup 1926. Yeah, Amazon. Amazon's a good one. Amazon's looking really good. All right. PLTR. This is a screenshot of the PLTR buy setup with upside price targets. There you go. Okay, let's go back and look at the SPX. All right. Now, with these neutral iron flies, it's really just all about the timing. Sometimes I mess it up, sometimes I do it perfectly. The last one that I had in here ended up being perfect, but I didn't manage it perfectly, so that was kind of annoying. But everyone else made money, so that was good. I am just a normal, regular, everyday human that is not perfect all the time. So feel free to close your own trades whenever you see fit. As much as I would love to be, I'm not the almighty master. So as far as the SPX Condor is concerned, everybody has like a different way of doing this. Right now, it's up 20%. I only did one contract, so it's like $100. Nope, now $77. So there's people that are like, all right, thanks. Give me the lunch money. That's perfect. That's all I wanted. 20%. Close it out. Let's roll. I think one of the main criticisms that people always say about these SPX trades is that they move so fast at the end of the day, and that's 100% true. A lot of the time, I don't even really have time to post an exit alert on it because it will move so fast. So that's why everybody just has to manage their own trade the way they want to manage it. Last Friday when I was doing this, I closed mine too early and then everyone else got like a 99% profit. So, but there will also be times where, if you're greedy and you try to wait until the very last minute and then, you had a 50% profit and then it goes to a loss. I mean, that's no fun either. So, um this is just one of those things when it's Friday expiration, you just have to have a goal and a target in mind. Generally, my target is like 50%. So, since I sold it for 485, I could place a good till cancel order right now and place it for 240. Which is what I was trying to do last week, and then it got messed up on me and it just closed at the right price. So not super fan of doing that again. Um, as you can see, I'm bitter about it. But the name of the game on a Friday expiration, it just depends. Today we sold premium. So selling premium, the thing that you have to do is just wait and just let the time tick down. But in general, with these kinds of trades, I don't love being in them once it hits the last 8 minutes because far more often than not, the last 8 minutes is when you start to get a good move. So with the neutral iron fly, you do not want there to be a big move. You want the SPX to stay right where it's at, and you just want the theta to decay into your own account. So when you sell it for 485 and it's going for 340, you can buy it back right now and make 30%. Or you can sit here and sit on your hands and try to ask me some other questions and distract me with something else for another 5 minutes and see if you can get it to decay down into, 240. The risk is that if the market moves here and if it moves, 5 points, your 30% is going to go away. If I would have done more contracts, I could have just scaled out right now, but this is what I did today. So, right now you're trading at 69.73, so no complaints there. The other way that I manage this is by looking at the market internals. So the reason why it seemed like a neutral day is really just because we already had this big move. We came up, we're hanging out here. Nothing really too much was going on. We don't have any extreme buying. We don't have any extreme selling. We're just kind of hanging out. The volume is basically flat. The VIX is basically flat. If it was a directional day, we would see some kind of movement somewhere, whether it's buying in the ticks or the vol spread shifting higher or the VIX falling or any of those things. But right now, everything is just very neutral. So that's why I did the neutral trade. Um, all right, let me see what other kind of questions I have. Buy XLE, somebody's posting about that. I don't like trading XLE. I'll look at it for you, but I just never have any good luck with that. The Queen Giphy, that's funny. When do you buy a butterfly versus just calls versus an ironfly? The main reason to buy a butterfly is because it makes your entry point cheaper. So, like I was talking about with Palantir, the long call the long call that was the most favorable would have been about $1,800. Um, the reason why I got into butterflies was because when I first started trading, I was, pretty broke and I didn't have a lot of money to trade with. And I was in the trading room and I was listening to John and listening to Henry, and they were buying long calls in Tesla and buying long calls in Amazon when it was $1,500 a share. And there was just no way I could afford it. Not only could I not afford the long calls, but I could not afford the anxiety that came along with buying a long call on Tesla. So the reason why I got into trading butterflies was because you can still trade a directional move. Um, but you can get in for a much lower price. The trade-off is that you have to be a lot more you have to pinpoint it a lot better. With the long call, it's just kind of one of those things where it's like you buy it and hope it goes higher, based off of the pattern, and of course you have to give yourself enough time. But with the butterfly, you really have to get as close as you can. You have to use your technical analysis to say, I think the price target is 200 within the next 3 weeks. With the long call, it's more so a function of, okay, yeah, I think it could go to 200, it could go to 210, it could go to 220, but I want to be long kind of thing. So, that is the difference as far as a butterfly or just a call. Now that I'm not poor like I used to be, I will buy long calls, but it still is a function of money and it's a function of risk. So, like I was trading which one was the last one? Reddit I closed out yesterday. That long call was pretty pricey for me. I don't generally buy long calls that are like $3,000 a piece, but I did for Reddit because it was a really good setup. Um, I think we're gonna need to close this because I think this is gonna start selling off right here. Dun, dun, dun. I was trying to get it down to 240, but it's not. It's just the premium is holding on, and I do not want it to go, I would rather take 25% than take a loss, is the situation here. So I'm going to see if I can close this. Give it to me, baby. Because we're starting to pick up with some movement. All right, so I'm filled at 365. So, I mean, it could go and be a perfect, it could still be like 100% profit, but I'm gonna go ahead and close it there. Oh, and I need to go look at our cat. Looks like that one's coming back down. That was up a lot more today. So I pretty much closed out a lot of the trades I had on this week. Had Reddit. Just post this with 2 close, taking 25% profits. So I had Reddit. I closed that one yesterday. Had Google, had Amazon. Man, I had a Google butterfly for 3:30 today that I closed too early, which I'm sad about because that butterfly. Does anybody still have that butterfly? Man, I wish I still had that butterfly. It's always just, you're always just weighing like, should I give it one more day? Should I give it one more minute? That kind of thing. So I did go ahead and close my Google butterfly too early. It came up to the perfect target right here and now. So hopefully somebody else held it longer than me. Come on. What's this doing? But, I've just been trying to start off the year on a really good swing, which has been working out for me. And um, here's another good example of one where I ended up buying the long call instead of the butterfly. I bought the long call on this one because, again, there was that consolidation right here. You had earnings coming up. This is a ticker that generally rallies really good going into earnings. So for all of those reasons, I went ahead and bought a long call on this one. And I got a little lucky just because there was a big news announcement, but that is also the entire point of trading the squeeze is because it's consolidating and it's ready to break out. So that was one where I bought a long call instead of a butterfly. I also bought the long call because if you're buying you don't want to buy a butterfly in an earnings series because the implied volatility continues going higher into that earnings report and then um it will counteract the rise in price. So you don't ever want to put a butterfly in an earnings series. So that was the other reason why I bought long calls on that one. And then as far as the neutral iron condor, when do you do that? You do that when you think the price is going to stay in a range. So, for example, Taiwan Semi has earnings coming up on the 15th. If, for example, not saying I want to do this, but because the implied volatility is going to be high right before an earnings report, you can come in and sell the at the money calls and the at the money puts and buy outer wings for protection. And then basically what you have is a ticker that stays, well, the goal is that you're selling the at the money premium, juiced up premium before an earnings report. And then in theory, if it stays within a range, you can then buy it back the next day um, for a debit. And so that's kind of the goal and what you want to do with that. Um, the iron condors are not going to work if the ticker goes outside of the range because it's a range bound trade. So you have to put them on and then you have to watch the theta decay and then you have to take them off before the ticker moves out of the range. Do you see what I mean? So it's a neutral trade. It's not a directional trade. And so now at this point, the SPX, I mean, it's definitely kind of selling off here at the end of the day, which is why I said, I would rather get out even though my price target was 50% profit, I would rather get out for a 25% profit than have a loss. So when I could see that the selling was starting to pick up, that was the time where I was like, okay, I should probably get out of this neutral trade, because the neutral trade, the entire point is that it's range bound. So if I buy a call in the SPX and the money would it cash settle if I don't close? Yeah. In the SPX, it cash settles. How do you decide between a call spread or a butterfly? Does it change your decision for the expiration timeline? It doesn't really change my decision as much for the expiration timeline. I pretty much always stick with the butterfly instead of the call vertical or the call debit spread, just because the butterfly is usually going to be substantially cheaper than the call vertical. So it's like pretty close to being the same thing. The debit spread is going to be more favorable if the ticker goes through the other leg. So like on Palantir, for example, um, if you have a situation where, you're targeting that $200 strike price with a butterfly and it goes right to the $200 strike price within like a week of the expiration time, your risk to reward on the butterfly is usually about 1 to 3. But the debit spread, if you had a debit spread on, the debit spread risk to reward is usually 1 to 2. So you pay more for the debit spread and you can make less. However, with the butterfly, if it explodes through the center strike, which is at 200, you're going to start losing money. And it doesn't really function the same way with the debit spread, because the butterfly is just a different ratio. With the butterfly, you're long one, short two, long one. And with the debit spread, you're long one, short one. So you just have to pick your poison. It's like, do I want a cheaper trade with a better risk to reward? And the pushback is always, well, what if it goes through the center strike? That's what people always say. What if it goes through the center strike? Well, you close it. You take their profits and you close it and you move on to the next one. That's what I do anyway. Um, I would prefer the poison that I would prefer is the lower cost and the better risk to reward. Because when you're, like me and you're in here and you're doing all kinds of trades, it's like how much money are you going to have at risk overall? How many trades are you going to have on at one time? If I can bring down my cost basis on every trade, um, it's going to benefit me. So that's what I prefer. But there's also a lot of people that are like, I hate butterflies. I never want to do a butterfly. And that is totally fine. With trading, you just have to find what it is what works for you and what it is you like, and do more of that. So it looks like RCAT, I probably should have closed it. It was looking a lot better an hour ago, but now the market's closed. This is a trade that I've had on. It's been doing really well. It's made multiple different price targets. I should have made sure that I checked that right before the market closed, but that's okay. These calls that I have on are all the way out into February, so I still have time on them. I don't love the way that this reversed right here at the end of the day. Not 100% ideal. But if you're looking at this and you're saying, okay, what do I do with it now? You're 5 dots in on the squeeze, so there could still be some more upside here. Obviously, now that the market's closed, I can't close it now. But if I would have closed it before, it would have been a perfectly fine spot to close it because it's already made multiple price targets to the upside. You made the 1272, you made the 1618, you made the 2618. The main reason why I got into this one was because it has high short float. So whenever it makes another high, typically it's going to explode to, a higher high. I hope some of those explanations were helpful. I didn't get to all of the questions. I think I got a lot of really good questions today. TSM long, you love the Turbo VZO. Awesome. Yeah, if you're in the trading room or if you sign up for the trading room, the Turbo VZO comes with it. If you look at the link I just sent you in the chat. Let's see if I have any other questions. Love RCAT, Rocket Lab target. Have a great weekend. Thanks, Craig. So you sell a butterfly in the first leg? No. So when you're getting into a butterfly, it is you are buying the first leg. Here, let's find a chart setup. What's a setup somebody wants to buy? And I'll do an example. Here's a Fibonacci example for you. So your Fibonacci price targets in Rocket Lab, the first one was already met at 83. The next one is at 90, which I would say that's hit. So the next one after that's going to be 100. That's going to be pretty extended though. Let's look at a weekly chart. All right, so this one has a weekly squeeze. So it looks pretty extended on the daily chart, but on the higher time frame, definitely has a price target at 100. So longer term in Rocket Lab 100. So far in 2026, a 252 trade has not. What do you mean? We made money on the SPX, at least I did. The 252 trade was a sell. I already had the neutral trade on that I took off at 252, so I did not try to get into an additional 252 trade today, but it was definitely a sell. And if the neutral iron fly would have been left on instead of where I closed it, it would have been a loss, but I took the 25% profit on them. And you got the puts. I was tempted to buy the puts, but usually when I'm already trying to manage an SPX trade and I'm getting out of it, I usually don't add another one on top of that. All right, here, I'll do an example for you with the butterfly. So the butterfly short strike should be at your price target. It should be the spot where you say, you know what? I think it's pretty reasonable for this stock to go to that level, because the entire point of the butterfly is for you to buy one leg, sell another leg where you don't think the price is going to go through it, and then buy another one at a higher price point. So you're just trying to create a range of profitability for yourself. For A-Lab on a weekly chart, I think this ticker looks amazing. You have a nice pullback buy. You have a nice shift in pattern. The trend is shifting here. The price pattern is shifting here. The candles are going from yellow to red to green, back to yellow, but still shifting bullish. I had no idea this stock was so popular, and I talked about it on Charles Payne the other day, and I got so many comments about it. People saying they love it. I had no idea. I just thought it was a great setup. Didn't realize it was so popular. I like it for a couple different reasons. One of the main reasons I like it is because if you look at the earnings data, you can see that they're continually making more money quarter over quarter. So this quarter they made 10 cents, 13 cents, 23, 37, 33. That went a little bit down, but that's okay. 44 and then 49. So I really like to see that. I like the weekly squeeze. I like the cup and handle setup. Um, if you look at the daily chart pattern, it's not as favorable, but that's because it's in a weekly squeeze. So with this one, I don't know that I would have a great butterfly on it just because it's in kind of like a wonky daily chart pattern. Um, but let me just throw some fib levels on there. Oh, gotta get that last low. So the price target's at 200. So for example, if you're going to do a butterfly, just think about where would you want to buy the long call if you were going to buy it? And then that's the first strike of the butterfly. Do you want to buy it in the money? Do you want to buy it at the money? Do you want to buy it out of the money? If it's in the money, it's going to be a lot more expensive. If it's at the money, it's like a good midway point. If it's out of the money, it's going to be a lot cheaper, but it's also less likely for it to work because it has to then come in the money for it to make money. Does that make sense? So the first strike in the butterfly is always like, where would you put the long call, basically? And then all you're doing is you're just saying, you know what? I don't really want to pay the full price for a long call because it's really expensive. So, how can I bring down my cost basis by selling another strike to make this trade cheaper for me? So, if we go out and we say, all right, A-Lab, 21 days. We're trying to trade it up into $200. You're trading at 162. You have an expected move of $24. Can it make it there by January 30th? Maybe. February 6th, more likely, and that would be the week before earnings. Because at that point, you have a $30 expected move. So it could maybe make it to 200 by then, especially if it had a greater than expected move. So this one isn't a perfect example because the liquidity is not very good, which I guess makes it a bad example. So then you can see what not to do. Um, with a butterfly, you really need good liquidity in the options market. So you need to have enough volume and open interest so that there are tight spreads. If you look at the money call, which is the 160, and you can see that this is trading between 14.60 and $17. That is going to have way too wide of a spread for a butterfly because you're going to have three separate legs you need to trade. This leg right here, and then your price target would be up here at 200, and then the other leg is going to be here. So when you have a wide spread with three different legs, it's going to make the spread of the overall trade way too wide, and it makes it really hard to get filled on the entry and the exit. So to be clear, I would not actually do this butterfly because the liquidity is not good on the ticker. However, as far as just structuring it for an example, um, just think about it this way. Would you rather pay $15 for a one long call, or if you instead say, you know what, that's pretty expensive. That's pretty pricey for me. Let me see if I can bring down my cost basis. Let's do 160, price target of 200. And then let's see, 240. Let's just see what it looks like. Okay. So the long call was like what, $1,600? The butterfly doing this same thing where you're trying to trade the ticker from 162 to 200. Now instead of paying $1,700, you're paying $936. Do you see the point of that? So, you are going to limit your upside if it just blasts through 200. But when you're doing, trade after trade after trade, the whole point of this is, let's make it affordable. Let's make the risk worthwhile. Oh, I forgot to show you the risk to reward. But if you do the debit spread instead, people will say, well, why don't you just do the debit spread? You can just do the debit spread. You can do 160, 200, and then you don't have that third leg. The debit spread and the butterfly, you can do the same legs. You're buying the long call at 160 and then you're selling it at 200. That's bringing your cost basis down for the call. Let's just do one contract for comparison. So if you spend $12, your max loss is $1,213 and your max profit is $27.87 with the debit spread. And then I'll just show you the butterfly and then I'm going to let you guys go and I'll be back next week. Because it's Friday, right? Happy Friday, everybody. You guys are like, what is this lady still doing talking here? Get out of here. It's the weekend. I was just trying to answer the rest of the questions. Okay, so again, just for demonstration's sake, I'm not actually doing this butterfly because the liquidity is not good. If you look down here, you can see the spread is between 936 and 1214. When there's, a $3 spread in a butterfly, that's just way too much. But to just show you the risk to reward in this trade, it's 1 to 3 because your max loss is 936 and your max profit is 3,000. So the spread and the butterfly are going to cap your max gain, but it's just really not that common that you see tickers just exploding through those expected moves. So I find for the most part, it doesn't really matter unless you're trading the short squeeze. When you're trading the short squeeze, that is when I avoid the butterflies because that is the I avoid the butterflies when you're doing a short squeeze because those are the tickers where it's like they just go crazy and it makes it really difficult to time. Makes it really difficult to time a wild move that's outside of the expected range. The butterflies are going to work the best for tickers like Palantir that are trading in a trend. They pull back, they go higher. They pull back, they go higher. Like it's a more consistent, reliable it's just a more consistent, reliable trading setup and pattern. When it comes to short squeeze, that's when I'm usually doing that is when I'm usually doing just long calls. And then yeah, I can share my grid in the master in the trade room. That was the best butterfly explanation ever. Well, thank you. You can sell the butterfly for $9. I never sell butterflies because the entire point for me, again, there are so many different trading strategies. There's so many different ways to do things. My way is not the only way to do things. It's just how I do them because I like to do them this way. And one common thing people always say to me is like, "Oh, you should sell the butterfly." But in my mind, I would never do that because the entire point for me in doing the butterfly is because I want a 1 to 3 risk reward ratio. So if I am then um if I am then going and I'm selling the butterfly to somebody else, I am then giving that person the 1 to 3 risk reward ratio. Like I'm risking 3 to make 1 and I don't ever want to do that. Thanks for the extra time. I like your end of day analysis and trades. Thank you. Thank you. Yeah, I hope you found it helpful. Great exit on the trade. Thanks, guys. What indicator do you use to change the colors of your candles? That is a custom indicator that I have made, which is called the Trend Strength Turbo Candles. And I'll post a link in the chat for you. You can check it out. Really good explanation. Thank you. Okay, LO. Yeah, man, I gotta get some. There a lot of these tickers, you guys, from last year that people were just getting hammered on towards the end of the year, like they are on fire right now. So, OKLO, definitely one of them. Lennar, that looks like that one's trying to come back. I have like a whole list of stocks that I wrote for Charles Payne. Let me see. IonQ, BTS, NBIS, IREN, um, PL, Carvana, Lemonade, Reddit. And I always wondered how he knew what my stock picks were. Apparently, they have a spreadsheet on me. It was funny. I saw it in the last email they sent me of like how like my wins and stuff. Cause I'll go on the show and he'll be like, "Your record is so good," and I'm like, What are you? How are you calculating that?" Like, I know, but thank you. And so, anyways, I discovered in this last email series that I had with them that they have a spreadsheet on me. Disappointed you didn't name your daughter Lexi. It's funny. Do you have any stocks with short squeezes? So the ones that I used were uh well, Oklo. I want to buy some more of that. PL. So this is one that was on the watch list for short squeeze. Didn't short squeeze today. This is my actual short squeeze watch list. So basically what I do is I just look for ones that have the biggest percent change. So APLD, open. These are all like hand-picked tickers that I put on my list. So I can post a screenshot of this. Yeah, I can share the list. But I basically just sort it by percent change, and then that'll tell me what that will tell me which tickers are moving that day. Newbie listening would like to know what language you're speaking. The language of the stock market. It's my love language. Volatility is my love language. In case you didn't know, I also made a T-shirt with that on it, and sweatshirts. All right. Well, I think that I answered most of the questions that I could. For those of you guys on the live stream, I'm doing the live stream on Fridays, and then for everyone in the trading room, I'm in the trading room. You guys know me, so um, I'll see you in the trading room on Monday, and I hope everyone has a great rest of your weekend. Bye. And if you guys want to join the trading room, yeah, trade in silence. If you guys want to join the trading room, you can click on the link that I posted in the chat, and that actually comes with my grid. And as you just saw here today, this is what I do in the trading room. So we, split the time throughout the trading day between all of us colleagues at Simpler Trading, and we take a break at lunch, but there's always somebody trading the open, trading the close. I usually trade the close because I'm just not really a morning person. I'm much better at trading the close. So that's when you will generally find me in the trading room.